You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast. Hey guys, welcome back to yet another episode of the Young Investors Podcast with myself and Hamish Hodder. That was very radio announcer of me.
Yeah, very fancy.
Hamish, you got enough space on your computer to record this week's episode, do you?
Let me check. Let's have a look. Yeah, we got enough. We're good. We're okay. Yeah, we were just talking just before we started. I actually needed to check because I always have so little space on my computer now that I'm filming in 4K. Well, I guess it's been like that for a while, but the file sizes
those
are
files,
yeah,
they are so chunky. Because do you find that there's like one, I don't even know, recording file type where it's like really easy to edit, and then the others are like less, the file size is lower, but they're so much harder to edit. Like they clunk the system so hard. So I'm always recording in this easier to edit. Is it codec? Is that the right word for it? But man, the file size is just huge. Like I have a 1 terabyte SSD. And I just, within a few videos, that is just packed.
yeah, pretty much. Yeah, I think I have I don't have an SSD, but I have a couple 5 terabyte drives and I just put everything on there. I don't know. I'm kind of obsessive. I like to keep stuff just in case. So I just keep everything, which is probably not the best thing to do. I can't keep
the original files. There's just so many files and they're so chunky.
Yeah.
I actually rage quit and I bought a new computer. I built it with, it's now got 10 terabytes of storage.
Oh my goodness.
So hopefully that keeps me going for a little while.
Yeah. Well, that's the benefit of having a PC over a Mac, because I don't think I can expand the storage, at least not officially, I don't think. So
you probably just get like external hard drives, but that'd be about it.
Yeah, I just have external hard drives permanently plugged in.
It does get like that, doesn't it?
Yeah.
Oh, the life of video editors, hey?
Yeah, exactly. Not that any of this has anything to do with investing, but welcome back, everybody. I hope everyone's had a good week and is having a good weekend. And we've got quite a lot of stories to talk about today, actually. I don't know how much of this we're going to get through. A couple of pretty funny stories, I think, that happened throughout the week. One, there's always a funny, well, not always, but there's often a funny crypto story, and this week is no exception. There is a hilarious story that happened over the past couple of days. So we'll talk about that. A couple other things. The Fed. We'll talk about electric vehicles. Wait, I won't say too much because we've got a lot, and I don't know what we're going to get through today.
Yeah, but, true. There's a lot of good stuff in here. There's a lot of good stuff. It is a jam-packed episode. All right, should we get going?
All right. Today's episode is sponsored by Sharesight, which is an application you can use to track the performance of your stock portfolio. So you can basically bring in all of your trades either automatically through connecting one of the associated brokers, or you can do it manually through Excel or just manually enter each trade. And once you do that, it will basically allow you to track all of the different types of gains. So capital gains, dividends. If you have dividend reinvestment plans on your ETFs or any stocks, it will do all of those calculations for you. Currency gains, if you're buying shares internationally or you hold foreign currencies. And then you can also use it for when it comes to tax time. So Sharesight generates up to 12 different reports that can be used to track your performance, as well as used at tax time to work out things such as capital gains, dividend income, and more. And at the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That site spelled SIGHT, sharesight.com/young investors. So use that link, sign up to a free plan, track up to 10 holdings for as long as you want. But if you also want to sign up to a paid plan for more premium features, more get access to all of the different reporting, then you can also use that link to get 4 months off a yearly subscription. So go check it out if you're interested. And thanks to everyone who has used that link when signing up and is supporting the podcast.
Absolutely. Also, I wanted to mention up the top of the podcast that it's now November, and both myself and Hamish, we are both doing Movember. How's your Mo going so far?
It's still not there.
Neither is mine, actually.
Yeah, I mean, look, I just wanted to be involved. I think it's a great cause. I can't grow facial hair, so
Me neither.
Yeah, I'll have to. I think Tom suggested that I get every day. I just add a little bit more permanent marker. So I don't know how healthy that is, but that might be how I have to go.
Buy some like mascara. Don't use it on your eyes. Use it on your little mustache.
It's gonna be a very flat mustache.
Yeah, no, I'm rubbish. I mean, you've got a couple years. How old are you? I forget.
I'm how old am I? 23.
23, okay, and I'm 26, so I got a few more years. So it's like more respectable that you can't grow facial. I can't grow facial hair, and I'm 26. So I'm terrible. Hopefully, I can get a little. See, that's the thing with my facial hair. It's like super ginger when it grows out. It's bright red. It's like Ron Weasley kind of red. So hopefully we'll get to see the little gingy come out to play. But yeah, if you'd like to make a donation, we'll try and leave a link in the show notes.
I'll put the link in there.
For this week, or you can go over to just Movember, the Movember Foundation, and you can look up, our team name is Margin of Safety. That is just the best team name ever.
Who came up with that? Who?
I don't know. I just heard it from Tom. I don't know exactly who came up with it, but gosh, that is a good team name.
Yeah, no, it's good. Yeah, so you should be able to just search for us, on the Movember website, and then you'll be able to find the team there. So yeah. If you'd like to donate, please feel free to do so. I mean, it's a good cause. It's mainly about men's mental health and suicide prevention. As one bro dies by suicide every minute of every day, and Movember Foundation is trying to reduce that rate by 25% by 2030. So it's a good cause. If you have spare change lying around, or if you'd just like to donate, then please help us in our fundraising goal. But with that said, let's get stuck into some investing news. Where do you want to start? Hey, can we start with this flipping Squid Game crypto? What went on with this? I just saw that there was some scam that happened to do with Squid Game and crypto. I don't really get it though. What happened? Yeah. I mean, when I saw the headline that there was a coin called Squid Game coin, which is now basically it's a scam, but I just saw that headline. I just thought, wow, no way, wow, that really
skeptical.
Wow. No, so of course, I mean, in the world of crypto, there's always a new coin popping up, and the popular thing to do at the moment is, of course, try and catch some kind of wave of popularity and have a coin that kind of explodes as a meme coin and just gets a bunch of people talking about it, so that it goes up a bunch in price. And then if you're should I say skilled or lucky, you can get out just before it collapses. we'll say lucky, or maybe, I mean, if it's a scam and you created the coin, then it's not really luck. It's just kind of by design. It's a bit scummy. Yeah. But of course, at the moment, we're kind of a couple of weeks, I guess, or maybe a month after the launch of the most successful Netflix series of all time, which was a Korean TV series called Squid Game. With everyone in the crypto space looking at, what coin they can create that will be popular, someone created this week the Squid Game coin. Squid Game. Wow. I mean, it has the symbol, like the name of it is squid. So I guess I guess that's like the ticker symbol or whatever. I don't even know what you call it in crypto, but the Squid Game coin. So everyone jumped on it. Of course, everyone thought this is the next big thing, right?
It's the next Doge. It's the next Shiba Inu.
Yeah, and to be completely transparent, Brandon messaged me and said, "Look, I'm going to get in on this," and I said, "Brandon, whoa, this could be a scam.
You sure you want to do this?"
Yeah, and then he said, "Yeah," and I said, "Okay. Let's go all in," and we did.
Yeah,
and here we are today. No, so a lot of people piled in, and the timeline of what happened for this coin is just hilarious. There was a great Whiteboard Finance, Marco at Whiteboard Finance on YouTube did a video just a couple of days ago covering this, and he includes a couple of hilarious clips from the events that unfolded. So I'd highly recommend you go check this out. But the timeline of what happened for this coin on Sunday is just hilarious. So at 1:30 a.m., the coin was $38 a coin. 2 hours later, at 3:35 a.m., it was 93. So it already tripled in 2 hours. Another hour later, 4:35 a.m., it was 434. So it quadrupled again, now over 10x in 3 hours. Another hour later, at 5:35, it was $2,857 a coin. And
holy smokes.
On a market cap basis, so the value of all of the coins, that was $2.8 trillion worth of market cap, which is double the GDP of Australia. So, this coin was well on its way to the moon. It was double and quite a bit higher than the market cap of Bitcoin. So it had a market cap that was, quite ambitious.
Yeah, you could. To put it lightly, yeah.
Yeah. So that was 5:35. 5:40. 5 minutes later, it was 0.00008. Which is just crazy, right?
That's quite a crash, isn't it? 99.999999% crash.
Yeah. Man, there is a hilarious clip of somebody who was live streaming when it collapsed, and it's at 2,800 or whatever, and then 10 seconds later it just blip, it's just zero.
I saw that. That was hilarious. That was so funny when that happened.
Yeah, it's just amazing, right? It's obviously really sad. If you were involved in the coin, I think, and it was a scam, right? It was one of these coins where they let out a small amount of the coins, to the public, and they're being traded, but the vast majority of the coins are held by the people who created it. And then when the time is right, they just offloaded all of it and they can make a bunch of money. I think they made a couple $1 million or something. I think someone estimated. And then, everyone else, of course, gets absolutely screwed and it's gone.
Yeah.
So
yeah, there you go. That's crazy. Honestly, it's like two ways to think of it. Like, I feel really sorry for people that, just maybe struggling. They just want to try and make some money, and then they just jump into these kind of speculative coins just because they don't know any better, and they're just trying to make some money, They see other people doing well. But then at the same time, the other half of that coin is just like, the other side of the coin. Lol, good one, Brandon. The other side of the coin is just like, man, if you go for things like that, then it's like, oh, geez. Yeah, that's pretty crazy if you're going to dump thousands and thousands of dollars into this speculative coin that no one's ever heard of just because Squid Game's a cool show on TV at the moment. You are setting yourself up to lose a lot of money at some point, aren't you?
Yeah, it's getting really bad. There are just so many coins now, and there's a big part of. I just hope that most people realize that what they're doing is gambling when you're getting involved in coins like this. As long as you know that, then
that's true.
Have at it, like what?
Do what you want.
Look,
just know what you're doing.
Yeah. One side of this is pretty funny, I think. I don't know. Does that make me a bad person?
Absolutely. It's hilarious. Look at those numbers: 38, 93, 434, 2857, and then 0.00008. That's pretty hilarious. But then, the flip side is that a lot of people lost a lot of money.
Yeah. Anyway, I'm sure nothing will probably happen from this anyway. I'm pretty sure the people who created it are probably just going to get away with the money. It's
cryptocurrency, right?
Yeah,
this was one of the original arguments against crypto, is that it's very easy for criminals to get away with things. Because who are you going to call? The FBI, excuse me, somebody scammed me via cryptocurrency. Oh, well. It's a shame that it wasn't a credit card fraud or something where you can go to your bank or you can go to someone else. It's just, see you later. Money gone.
Yeah.
No, it's pretty rough. But anyway, there you go. Squid Game coin. Hey, crazy.
Who saw that coming?
Crazy. Who saw that cut? Yeah. What should we talk about next? You want to talk about run through maybe some electric vehicle news?
Yeah. What's been going on?
Okay, well, we're not talking about Tesla this week, but we are talking lots of news on electric vehicles. So you remember a couple months ago we were talking about Rivian, the new kind of startup electric vehicle company backed by Amazon, making the pickup truck.
That's right. Yeah.
Yeah. They were targeting an $80-something billion IPO.
Yeah.
or 80 something billion valuation for their IPO. They've now reduced that slightly. They are now eyeing a 53 billion valuation through their IPO.
Much more modest.
Yeah, much more modest. Exactly right, Hamish Hodder. And this is even though the company still makes no money, and they basically deliver no cars. I'll tell you about it. So the article reads here, electric vehicle startup Rivian hopes to raise $8.4 billion in its initial public offering, according to a regulatory filing posted on Monday. The company, which is backed by Amazon, said in the filing it plans to offer 135 million shares at a price between $57 and $62. Underwriters also have an option to buy up to 20.25 million additional shares. If underwriters exercise that option, Rivian could raise as much as $9.6 billion. So based on the number of outstanding shares, that would put its market valuation at $53 billion. And if employee stock options and other restricted shares are considered, Rivian's valuation could be as high as $60 billion. So that is a chunky valuation. What are your thoughts on that? Are you going to be a buyer, Hamish?
Well, I mean, maybe. I mean, 60 billion is just a number. You have to compare it to something, and I presume that they must be doing, tens of billions of dollars worth of revenue, and below naturally. That, a lot of maybe single digit billion, but some in the billions, some profit there.
And mate, you got to get in on this to make up for the losses you took on Squid token.
Yeah, exactly. Yeah, I'm well in the red. So this has to be the ticket home, or else. So I'll just. Actually, one other note that I wanted to chuck on is that recently in a Amazon filing, they actually revealed that their ownership stake is 20% in Rivian. Okay. So Amazon owns 20%, which is quite a decent chunk, really. They have financed a lot of their startup costs so far. So a couple of stats from their S1 filing. As you're saying, you're expecting billions in revenue, right? Well, their revenue which is expected for the third quarter, $1 million. Oh, $1 billion's not bad.
No, Hamish, 1 million. 1,000,000.
Oh,
yeah.
1 million.
Yeah.
1 million in the third quarter.
Yeah. $1 million.
Oh, okay.
Yeah.
All right. Okay. Yeah. That's okay. That's all right.
It'll get there.
Yeah. I presume they're profitable, right?
Well, Hamish, unfortunately, they're currently running a net loss of $1.2 billion per quarter.
Wow. Yeah. That's great.
They'll come back. They're investing heavily in the business, Hamish. $500 million. No, in all honesty, they are investing heavily. Yeah, they are investing heavily. So there's $500 million in capex per quarter at the moment.
Right. Yeah.
And they're expected to come in at the end of the quarter with $5.1 billion in cash and cash equivalents. So that's kind of some stats that they gave in the S1 filing. And while it is a crazy valuation, if you just looked at those stats, you would just be like, this is ridiculous. I mean, they've just started delivering their vehicles, their electric pickup trucks. Guess how many Rivian R1Ts they delivered in the third quarter?
How many they delivered?
They did deliver some. Guess how many?
I don't know. I mean, they did $1 million in revenue, right? That's not that many. What is that, like not 20?
They delivered 12 cars. Yeah. But yeah, like we laugh at this and it's a funny kind of story because the valuation is so high for where they are at the moment. But I mean, this is just the way it is with a lot of IPOs. It's to be expected because they are just very early in their process. I mean, rewind Tesla's story, a decade ago. And they were in the same spot. Maybe the valuation wasn't quite as ridiculous. Or maybe it was. I don't know. I'd have to go back and look at that. But, they're going to Rivian are going to ramp production over the next year or two. And people obviously want in because they think that while you look at the stats, they delivered 12 cars. It's not like they're going to deliver 12 trucks each quarter for the next 4 quarters. I mean, that's going to get much, much steeper. And clearly, Rivian, they want to supercharge their growth by by going public at this point. So they're going to issue new shares, inject cash into the business. They're going to raise as much money as they can, chuck all that money into growth, and see where they can go.
Yeah, I mean, you can't use normal valuation metrics on these kinds of IPOs. I mean, if you think of an IPO, what you're really doing is you're betting on a company that has an idea in a lot of cases, or some, minor business, but mostly an idea. Before they've had a huge injection of capital. Like the IPO is them getting a massive amount of money to then do everything that they think they can do in the future. So you're betting entirely on the future of the business. And I mean, even, with most investments you're making, there's some bet on what's going to happen in the future. You're betting on that the business continues to expand and grow. But with these kinds of businesses, everything is what's going to come in the future. And a lot of the time, they don't have any kind of proven record of doing what they want to do at a smaller scale. I mean, they're selling 12 vehicles, so it's very, very early stage. But who knows? Maybe they'll do well.
Value investors don't really get interested in these kind of IPOs. No. I'm certainly not interested in it. But, it is still quite newsworthy because Rivian is obviously hoping to grow. They're backed by Jeff Bezos and Amazon, and they want to be a major EV player. And exactly what you're saying. It's like they're pretty much just starting right now. It's like they're essentially a brand new business. So people are not buying it based on what's happening now. They're buying it based on what they're going to be able to do with this cash and where they're going to be in like 3, 5, 10 years from now. So it's very interesting. And also, so that's kind of what I wanted to talk about with Rivian. We'll see how they go with their IPO. But another thing that caught my eye in EV news, did you see the new concept electric pickup from Ford?
No, I haven't seen this.
You didn't?
Yeah, I'm gonna.
Can you see that link in the doc? Yep. Open that link. Yeah. So this is the Ford F100 Illuminator concept truck.
Okay.
Which is a concept electric pickup truck by Ford with the retro styling of a 1978 F100 pickup. That
is really cool.
How cool is that?
Yeah, you know that I really like old stuff. So
you like the retro kind of, the classic retro.
That's really
look.
cool.
That's awesome, isn't it?
Yeah, that's probably the best looking electric vehicle I've seen. That would be my pick.
Classic design.
That's cool. They should do more of those. And Ford,
I reckon they should.
Ford has a lot of really nice classic vehicles that they've produced over time. So they could do this with a lot of different
Mustangs,
vehicles. They could
old Mustangs.
If they did that with a Mustang, that would be extremely popular.
That'd be crazy.
I can guarantee that. That's really cool. I like that.
But interestingly, it's great. And I definitely encourage you guys, go and have a look. Obviously, this is audio only, so it doesn't really work, this story. But go look up the F100 EV pickup truck from Ford, and just it's so cool. And these concept trucks or these concept cars are always just created to make a bit of a buzz and to get the word out there. They're not actually made for mass production, but this worked perfectly. I was looking all through Twitter, everybody that's anybody on Twitter is talking about this flippin' truck. All of the big social media or celebrities, all the big YouTubers, they're all talking about this truck. So they definitely hit their targets forward with what they wanted to achieve. It was essentially they built the concept truck to promote its e-crate motor, which is essentially they're just selling the motor out of the Mark E, the Mustang Mark E, and so people can just buy the motor if they wanted to do conversions to electric cars, if they just wanted to use the motor for commercial purpose or a different purpose. So that was actually the reason behind doing this, is that they wanted to say, hey, look, we're selling this motor, you can actually just buy this motor and do with it what you will, like what we've done here with the old F100.
Okay.
So
yeah,
I thought it was pretty cool.
But
it definitely drew attention to it. I think that's cool. I mean, there's so many people that would love to. I see this on YouTube all the time. People that take old classics and convert them into EVs. It's becoming super popular. So, good luck to Ford, and I think that they'll get a lot of takers buying. I think it's $4,000 for one of those motors. So, I imagine they'll get quite a few sales. But anyway, well, let's not dwell on this story for too long because, there's not really too much to talk about. It's not going to revolutionize Ford's business or anything like that. So where should we go? Do you want to talk about, we were talking a lot about Facebook last week in their metaverse story.
Yeah.
We've got a big update on that. We kind of reported just before all this happened. So now we've got a whole bunch of news. Do you want to run us through that?
Yeah. So we were talking last week how they were maybe going to be changing their name from Facebook to something new.
Bookface, wasn't it?
Bookface. Yeah. That's, or Zuckerverse was,
Zuckerverse. Yeah.
Kind of disappointed they didn't go with that, but yeah. So they did their Facebook Connect event, which is essentially an event they do every year where they showcase what they're working on with virtual and augmented reality. And of course, this year they had a big focus on the metaverse and what it might look like, what's available now or coming out over the next year, as well as some of the futuristic tech that they're working on in the research phase. And then they also unveiled their name change. I guess I'll talk about the name change first. So they changed their name from Facebook Inc. to Meta Platforms. Right. I was kind of disappointed we didn't get Zuckerverse. That was that would have been my choice. But
I mean, the name does make sense though, with all the rumors that we've been hearing and Mark Zuckerberg saying metaverse for like the past 3 years.
yeah. I mean, I think it was pretty. I don't know, a safe name change.
It's safe, yeah.
Yeah, exactly. I don't know. I don't hate it. I don't.
It's fine.
Yeah, I mean, yeah. I really had kind of no real feelings on the name change. A lot of people seem to really, really hate it. But I don't know. What do you think?
Yeah, I think it's fine. I mean, it's in line with what Zuckerberg's saying that he wants to do. So it makes sense. I do believe, I agree with what you're saying. It's kind of like a safer corporate. It's not really pushing the boundaries or out there too much.
Yeah.
That would have been, just imagine what the news articles would have been if he had renamed it Zuckerverse. It just would have been the funniest thing.
Yeah.
But it also wouldn't have gone very well for them if they named it that, because nobody would have gotten behind that name at all.
Yeah, I'm pretty sure.
But yeah, metaverse, there you go.
Yeah. Yeah, meta platforms. Of course, investors.
Yeah, sorry, meta platforms, not metaverse.
He just calls it metaverse.
Yeah, why not?
Yeah, I mean,
he essentially did. That's what he means by it. But yes, meta platforms. My bad.
Yeah, pretty much. Of course, the investing world is super switched on. So immediately after this happened, a stock for a Canadian company called Meta Materials shot up.
Oh my god!
So congratulations to all the early investors on Meta Materials, not Meta Platforms.
That's hilarious.
So, that happened. No, but so that was kind of like the last 5 minutes of the event was this name change, and everyone's kind of focused on the name change as this massive thing that Facebook is doing. But really what they spoke about throughout the whole 90 minutes of Facebook Connect was, do they call it Meta Connect now? I guess. I don't know.
I guess so.
Do they still call it Facebook Connect? I don't know. But what they spoke about throughout, of course, is kind of what they're working on at the moment. I won't kind of bore you with too much, but I just kind of want to go through the headlines of a few things that was brought up. As I mentioned, they had a big focus on kind of what the metaverse will look like. Zuckerberg said, "We believe the metaverse will be the successor to the mobile internet. We'll be able to feel present like we are right there with people, no matter how apart we actually are. We'll be able to express ourselves in new, joyful, completely immersive ways, and that is going to unlock a lot of amazing new experiences." So that's kind of where Zuckerberg and Facebook or Meta Platforms. I'm going to keep calling it Facebook. That's kind of where they see it going in the future. They spoke about what's kind of around the corner for VR users at the moment. So people who have an Oculus VR headset, such as a Quest 2, will be able to access Horizon Home and Horizon Worlds, which are, one is kind of a social space where you could invite people and hang out and that sort of thing. And one is where you're actually able to design and build VR spaces and then invite other people to join.
All right.
Later this year, they're bringing VR to Messenger calls, which I think is kind of cool. Again, a lot of this is not relevant, I think, to the vast majority of people who don't have a VR headset. But it kind of gives you an insight into maybe a future where it's much more widely available. But I think that's kind of cool. Instead of doing a FaceTime, you could grab your headset off your desk and basically go and sit in the same room as someone rather than just holding up your phone and doing the call that way. Or maybe if you're working through your VR headset, then you don't even need to put your headset on. You just answer the call and the person kind of pops up next to you in the room, that sort of thing. A lot of this is, still very abstract. But some of the tech they're working on is really starting to show off the potential of what we could potentially be seeing in, say, a decade or 2 decades time. They demonstrated their photorealistic avatars. Did you see this?
Oh no, I don't think so.
I'll have to. I don't have a link for you right now.
That's all right. I'll just look it up.
Yeah, so they shared some of the research phase stuff that they've got at the moment, which is, very far away from being available. It's probably a decade away, I would imagine, from being available. But they're able to, at the moment, create these photorealistic avatars. So
oh wow, they look kind of weird.
they do, right? And you can imagine a point where online meetings are not done through Zoom and they're done, entirely through these virtual meetings where you have an avatar that has facial expressions and basically just looks like you. And it would be like you're sitting in the office with everybody. And again, this is really abstract. It's kind of hard to conceptualize, I think, but I can see definitely in 10, 20 years that this is, the way that things are done. To me, it's really cool. I'm really interested by this stuff. So, I know that, for some people this stuff might be a little bit out there, but they also unveiled a new high-end VR headset called Project Cambria. So this would be a more expensive headset and would include all of the latest features that they can put into a headset. That's at the moment too expensive for their $300 Quest headset, which is kind of the widely available one. And this expensive headset is going to have things such as eye contact tracking and facial expressions already, which I think is kind of cool. So you can't do, photorealistic avatars at the moment. You still have these kind of cartoony avatars. But they can do eye contact and facial expressions and like facial movements, which I think is kind of cool.
Wow. That looks pretty specky, doesn't it? I am seeing one problem though.
Yeah.
And the problem for adoption is going to be cost.
Yeah.
Because there's two problems. At the moment, I don't think people feel as though they need a VR headset.
Yeah. Yeah.
And for the small amount of people that do feel they want or need a VR headset, they are paying a lot of money for one.
Yeah, absolutely.
So I feel like for this to be successful, whatever it was called, what was it? Horizon Worlds, Horizon. What was the other one called?
Horizon. I just lost my spot on the sheet. Horizon
Home. Horizon Home and Horizon Worlds. I think those programs are going to have to be pretty amazing to entice people to, and all your friends too. Because I mean, you think about why Facebook's successful now is because of its network effect.
Yeah.
Right. So you need a network. I mean, imagine if you're in Horizon Worlds by yourself. You're like, oh, this is great. I want to show off what I've built to my friend. Oh, hang on. None of my friends have a VR headset.
Yeah, and
so I can't.
That's really the state of VR at the moment. It's a very kind of individual experience. You're playing games by yourself, or maybe you have a group of friends who have them. But yeah, it is very, very niche. And yeah, the cost of what they can do now will have to come down dramatically. And that's kind of something that naturally happens with technological advancement, and Facebook's putting a lot of money into that. But yeah, all of this stuff I think is, as I said, it's very abstract because it's not stuff we're going to go out and buy today. It's really, a lot of it is, going to be 5-10 years out before I think some of these things are widely used. Especially things like using a VR headset for work. I can certainly see that at some point in the future when it, makes economical sense for businesses to implement that to people working from home. But yeah, right now it doesn't. So yeah, it's all a lot of we will want to do this in the future, and this is what we're working on. So yeah,
Currently, a Quest 2 is 479 Australian dollars on Amazon.
Yeah. Yeah.
So there you go.
Yeah. So that's a kind of widely available, portable one that's available. And then they'll have this Project Cambria, which will be their much more expensive one coming out in the
Would be
future.
cool to try, though. Imagine sticking that thing on and experience the latest and greatest of VR. That'd be pretty sweet.
Yeah. Yeah. Well, I remember I got a HTC Vive, which was kind of the highest end one
did you?
for a while. Yeah. I bought one a long time ago now. I want to say, I can't remember exactly, but I want to say like 5 years ago or 4 years ago. And at the time it was kind of it was like the best thing available. And I just remember being blown away with what you could do in there, particularly when it comes to gaming. I think is kind of where VR is.
Yeah,
that's kind of the
where
front
it shines.
of. Yeah, exactly. That's kind of the front of VR is immersive gaming.
Right.
But yeah, now we have these headsets like the Quest where you can do pretty much everything you could do on a HTC Vive back then without an external PC. Like I had to be connected into a PC and have things set up around the room to track. So it's it's come a long way, but it's got a long way to go.
Right.
It's kind of
in the mid ground at the moment, are we?
Yeah. It's still got a long way to go. They also spoke about augmented reality, which I think is a really interesting kind of thing that they're pursuing as well. They have their project Nazaire or Nazari, I think, or something.
Something like that.
I don't know. That is their AR glasses project, so augmented reality. So kind of bringing things into the world while you're still kind of walking around. They had a couple of cool demonstrations where for things like doing a fitness workout, instead of having to do it in front of a TV, you could put on your glasses and the person would just kind of appear in front of you in your backyard and would kind of demonstrate what you had to do. So I think, a lot of these things are just things that are, they're far out in the future. They're not available right now based on the tech, but I think there's a lot of cool things that VR and AR can do. So it is interesting to kind of see them talk about it. And it's good to know that I think as an investor that they have kind of a plan for transitioning their business out of just the core advertising business that they have, which is still growing at a good clip, but has a peak in sight, I think, over the next decade.
Yeah, I'd agree with that. I said that last week, I think, as well, is that I much prefer seeing this sort of stuff than the Apple approach, which is just, all right, we make a lot of money, let's just give it away.
Yeah.
You're a shareholder. Check under your seats. That's right. $50 billion buyback. Hey. I much prefer seeing big companies try and do something, a little bit far-fetched that could be amazing. I mean, you think about this, if they do it right, and, whether you think that's going to happen or not is up to you, considering Facebook's recent track record. But if they can do something like this right, it could be amazing. I mean, I know that everybody that chucks on VR headsets comes out of the experience saying, holy moly, I've never experienced anything like that.
Yeah.
And if they can actually turn that experience, that amazing experience of being in a virtual reality space, and they can actually give it a utility, then that would be amazing.
Yeah.
And I hope that they do it. I hope that they do it well with, strong emphasis on privacy and this sort of stuff. So that, people actually have faith in this. But I much prefer to see them, they've got a killer balance sheet. They're not going bankrupt. It's not like they have to play it safe for the next few years. I like them saying, we're going to try and do something really big and bold. And if we do it right, it's going to be awesome. And just give it a shot. It's like, that's why I love Tesla so much. It's like, we're going to try and build these EVs that are big and bold and that drive themselves. And sure, it's going to be difficult, along the way. People are going to resist and not like it, but at least they're doing it, At least they're not, Tesla could have been like, we're facing a lot of backlash in the media, so we're going to start building ICE cars as well as EVs. I mean, imagine if they did that.
Yeah.
I'd be like, oh, no way. What are you doing, Tesla?
Yeah. I mean, the thing about this from an investment point of view is, for me at least, was when I made the investment, it's not as if I was thinking, oh, this has to be a big thing for the investment to succeed, right?
That's
like
true.
it's kind of I like businesses where you kind of get the best of both worlds. You get a core base of the business where the valuation makes sense, but they're also doing something that has the potential to make it an even better investment. And that's kind of where I see what they're doing in VR and AR for Facebook, right? It's cool to talk about, but I have no idea what kind of cash flow this will produce for them in the future, if any. So that's kind of how I think about it. It's just something cool to kind of follow along with and see what they're doing. But from an investment point of view, this has no influence on my decision, on the positive side at least. So yeah, that's kind of how I think about it from an investment point of view. It's kind of like getting in on we were talking about Rivian before, and how when you're investing entirely on the future of the business. With Facebook, you kind of get that plus their core business, which is extremely solid. So that's kind of where I'm at with Facebook.
Imagine the ad experience in VR. It's like just the walls of every room are just ads. It's like you're just like walking down a hallway, and instead of paintings on the wall, there's just ads.
Yeah, I mean that's the unfortunate part of the world we live in now. Everything is just where can we put an ad?
When you walk up to your best mate's avatar, in the middle of their forehead, there's just an ad.
Yeah.
Their shirt's just an ad. It's all just ads. It's a world built of ads.
Ad.
Yeah. I can't get through the ads. That's too much. Go on without me. Anyway, is that all we got to talk about for Meta?
That's all I had to talk about. That's it.
All right. Cool. I've got a bit of a follow-up. We talk about this every so often. The Federal Reserve. What's the Fed doing this time? We can get through this quite quickly because the Fed is doing everything that was anticipated that they would do. So there's not really too much news. So the headline was, Fed is going to taper their market support, but we kind of knew this was coming already. It says the US Federal Reserve said it will begin winding down its monthly asset purchases later this month at a pace of $15 billion US dollars per month, starting the withdrawal of last year's emergency pandemic support, while expressing less certainty that the jump in inflation will prove temporary. So the FOMC statement reads, this is straight from the statement, says, in light of the substantial further progress the economy has made towards the committee's goals since last December, the committee decided to begin reducing the monthly pace of its net asset purchases by $10 billion for Treasury securities and $5 billion for mortgage-backed securities. So that means that beginning later this month, the committee will increase its holdings of Treasury securities by $70 billion per month and of mortgage-backed securities by $35 billion per month. Beginning in December, the committee will increase its holdings of Treasury securities by $60 billion and then mortgage-backed securities by $30 billion and so on. It will slowly wind down over time. It will likely keep winding down from there. And in other news, the FOMC decided to maintain the target rate for its benchmark policy rate at 0 to 0.25%, and the decision was unanimous. So, anything to really discuss there? Really nothing that we were not already expecting, I guess. Yeah,
not at all. I think it's everything that we've seen from the Fed recently. They said specifically that they wanted to they wanted to stop the support completely by the middle of next year, which is 8 months from now. So the fact that they're reducing it by $15 billion per month is perfectly in line to get them to be at zero or at net by June next year. So it's exactly what we expected. And I mean, the change is kind of minor at the moment, but we'll see more of the effect, I think, over the next 6 months, particularly if the US government is still trying to get through this, I think, $1.5 trillion spending bill. That's going to come with a substantial need for debt, for issuing more Treasury securities. And without the Fed buying a lot of them back, we will kind of see how that affects interest rates and whether interest rates do start to go up. But for now, it's a very minor change. So nothing too much I think will happen immediately.
Yeah, nothing to really add on that part. Yeah, I can't think of anything really to add. It's exactly as what we're expecting.
Yeah.
So should we leave that one and move on to the next story?
Yeah, let me give I got another quick update. I'll give an update on Evergrand. So we've kind of spoken briefly about Evergrand, which is of course the Chinese property developer on the brink of collapse at the moment with $300 billion dollars in liabilities or something like that. So we've kind of been speaking briefly about them week by week because they have these payments that keep coming due, and we're kind of seeing if they end up making the payments. The news this week was that Evergrand averted disaster again by making its second major bond payment that we were following. Right. So they had made the first one. It was like they made it 20. So how these bond payments work is they missed the payment, but then they have a 30-day grace period where they basically have another 30 days where they can make it. And if they miss that, they will be in default. But if they make it within that 30 days, then they can survive another day. So we saw the first one, they made the payment 28 days late. So it was fine. Another one was due, a $47.5 million payment was due. This one was paid 30 days after it was due. So right on the
that's tight.
As the clock was running down, they just made that payment. And of course, yes, if they had made it the day after, they would have very likely been in default. Evergrande bonds jumped in value on the news, which I don't really know why. I mean, I guess there's a little bit of positivity, but
they're more valuable, Hamish. I'm going to get me money.
So they did jump a little bit. I think they jumped like 8 or 9% in value, but they still trade 75% below their face value, what they should be valued at. And what that essentially means is, for example, one of their bonds, which is due in 2023, is yielding, if you bought it today at the current price, it's yielding about 190%, which
oh my gosh. That's insane.
Yeah, so that kind of indicates what investors think about whether that bond will end up paying.
Hamish, I don't know, but that looks like a perfect investment opportunity. Yeah, that's 190%. I want in.
What could go wrong?
Yeah. Oh man. It's just this classic. It's just risky, isn't it? If you bought that, it's just like, the payoff's big, but geez, there's a lot of risk.
Yeah, I mean, it's just a very long time. I mean, that's 2 years until the bond will be fully paid. So, I mean, will they survive the next 2 years?
Hundreds of millions in payments due before that time.
Exactly right. I mean, even just the rest of this year, there's another 338 million just in offshore coupon payments that are due in November and December. So there's hundreds of millions that are coming over the next couple of months. We've kind of seen what did we see? So we've seen a 50 million one, was 120 million or something like that the week before. So we've seen a little bit. We've seen a couple hundred million. There's another 400 million coming over the next couple of months. So
I wonder if Evergrande is still operating. I wonder if they're still able to pay, because I remember there was a little while ago they were struggling to pay suppliers and contractors and stuff like that. So progress on their developments was halting. Right. I wonder if they're able to, if their projects are up and running at the moment, or whether they're still stopped dead in their tracks. Because I mean, if they're not getting these apartment complexes finished, then I really don't see how they're gonna make these payments. But if they still had some money, just to pay just to keep the building going, the building works going, then maybe it would still be tough, but maybe they could get those things finished and sold, and they could realize some revenue from that.
Yeah. I mean, that's the thing. As time goes on, it gets progressively harder to work with people, right? Because a lot of the time you're working with suppliers on credit. And if they stop paying suppliers, then, how are they going to get new suppliers to make deals with them? So it gets progressively harder. And I'm sure there's a lot of unsecured debt and borrowings that they are failing to pay that, they're just failing to pay those, but the people who have lent the money don't have any claim on the business. So we're kind of waiting to see some of these secured loans where they have kind of a collateral on the business where they can claim the business and put it into insolvency if they fail to make these payments. But we will kind of see what happens. They failed to make a payment on the 11th of October. So if you add a 30-day grace period to that, that puts us at about, I guess, the 10th of November would be 30 days. So
yeah.
What are we at the moment? The 4th? So 6 days. Yeah. So we might get that one just before next week's podcast. So we might have a mini update to give on whether they meet that one. But it's not looking good. But so far, they've
I think our opinion has not changed.
They're still swimming.
It's still looking pretty grim.
Yep, they're still stuffed.
Yeah. Very interesting. I think that's everything.
That's everything.
Is that all? Geez, we got through it all.
Yeah, we did. I'm quite impressed.
That's a lot of news topics today. 1, 2, 3, 4, 5, 6.
Wow. Look at us go.
That's impressive. I think normally we talk like about 4.
About 4, yeah.
So yeah. No, that felt good. Keep the podcast rolling. I guess we should finish off, do 10 or so minutes of Q&A, hey?
I thought you were going to say let's do 10 questions.
10 Q&A.
Jesus,
all right.
what is this, a 3-hour podcast?
Fasten your seatbelt. Here we go.
Hamish, I've got you for the next 3 hours. We are going to finish all of these questions.
Oh my gosh, it probably would take us 3 hours to get through all these questions.
I think so.
We're still probably like 10 podcasts behind on questions. I don't know, but we still want more questions. We still like getting your questions. So send them through, chuck them in the comment section of the YouTube video for the podcast, which is at youtube.com/the Young Investors Podcast.
Yep. That's it.
Yeah. Okay, cool. Got it. What's the other? Oh, the other one's Sharesight.
Yeah.
Which is /Young Investors.
Yeah.
YouTube is the Young Investors Podcast, I think.
Yeah, it is.
Just type it into the YouTube search bar. It'll come up.
It'll be there, hopefully.
Yeah, hopefully. Unless YouTube deleted our channel after Hamish's anti-vax comments last week. Yeah. Oh, my gosh.
Oh, no.
Tell you what, you probably would turn anti-vax after that back pain that you were having. Oh, my gosh. Poor soul. Anyway.
Oh, boy.
Let's get into some Q&A. Let me read this one to you. Hey guys, keep up the great content. How picky are you when it comes to looking at a company's financials? If you see a company that has, say, ROIC of 15% but has equity growth of 9%, or say 25% ROIC but EPS growth of 5%, do you cease to do any further research on the company and move on? Or do you have a little bit of leniency?
Yeah,
thanks,
I think that's a really good question. Certainly, I think that the short answer is I do have a bit of leniency. I think when it comes to the growth numbers, I mean, Phil Town has his kind of strict criteria of you need 10% or more long-term growth of, equity and sales and earnings per share. I use that as kind of a guide when I'm looking at the growth of a business because every business is different. I mean, you can have really great businesses that are just a mature company in a slow growth industry. And maybe it's just unrealistic for them to grow at 12% per year. But maybe they grow at 6% per year consistently, year in, year out. And every year they produce their extra 6% in cash flow and they deliver it to the shareholders. That can still be a really great business. So I think use kind of the 10% minimums and even the debt ratios. Use these kinds of things as a guide to kind of draw you towards businesses that are growing and do have consistent increases in these areas. But then, it comes down to, businesses are businesses. They vary in a bunch of different ways. And you can just kind of look through the annual reports and learn as much as possible about the business and then make a judgment from there. So, I definitely have leniency when it comes to numbers. But, to a certain extent, I guess. I'm not going to look at a business that is declining for 10 years straight and then think, well, maybe it's going to turn around.
Potential turnaround. Yeah. No, I'm with you. I'm with you on that. You're never going to find a perfect business. there's always going to be something. I mean, if you found a perfect business, then chances are there's no point looking into it because it'd just be so wildly expensive because everyone else would have bought it already. Yes. There's always going to be something that doesn't quite fit. So I think what you're talking about is right. You just want to use that kind of 10% idea as a guideline to make sure you're looking at the right kind of stuff. Like what you say, you don't want to be looking at a company that's going backwards. But yeah, there's definitely got to be leniency, but it comes down to your understanding the business. For example, as we saw 2020, a lot of companies' earnings just went through the floor. And you would have seen like the last year of free cash flow or revenue or whatever just go horribly, horribly red. And you would have been like, hey, what? Now I can't buy these companies. I was supposed to see only 10% growth. And you would have, passed on some really great businesses where those businesses you could have done your research and looked and seen that, well, this is clearly a short-term thing. This is not going to have any impact on the long-term growth of the business. And they have a balance sheet that more than covers them, even though their earnings have dropped this year. So there's that kind of thing. It just comes back down to how well do you understand what's going on. And obviously if you don't really get what's going on, then yeah, if you see that sort of stuff happening, just protect yourself by not investing. But yeah, if you see, revenues drop this year, earnings per shares drop this year. Yeah, but it was for COVID and it's a tank business. It's got a tank balance sheet. It's coming back. It's over the past 10 years, it's grown on like a 30% clip. So there's just those kind of considerations. But you're never going to find, it's something that I wish existed, but you're never going to find a company that ticks every single box perfectly. Yeah. So you just got to have some judgment, and best judgment comes back to your understanding, I think.
Absolutely. All right, I'll ask this one to you. Sure. Hey guys, love the podcast and your respective YouTube channels. Thank you very much. Was wondering what your thoughts are on the big American finance YouTubers like Jeremy from Financial Education, Andre Jig, Graham Stephan, and Meet Kevin. It seems like they all give subpar investing advice and just riding the wave that is the current bull market. We'd love to hear your thoughts. Thanks.
Yeah. Well, I mean, I think they're probably very nice people. I'm sure. I don't really have any beef with their content. No. And I don't want to pick on any one person in particular. And I just think generally speaking, I see a lot of YouTubers, there definitely is some riding of the bull market wave. I mean, you look at Robinhood's S1 filing and they've had 10.5 million new users in the last 12 months. And like 50% of those users are brand new to investing. There's a lot of kind of new investors getting into the market, and it's a massive bull market. So it's very enticing. And when you start looking at what, like the analytics from our side, from behind the curtain a little bit, when you start looking at the analytics of what people search for in terms of video content related to the stock market, you'll see a lot of the content is, or a lot of the search terms are, what stocks should I buy? And a lot of the search terms are, best stocks to buy now, how to invest, is crypto a good investment? Those kind of searches. So it makes sense that, from a YouTuber perspective, you want to create content that targets those kind of search terms. But personally, I don't like it when YouTubers create videos about, what stocks they're buying or what stocks you should buy. I think it's just, I don't know. I just think it's just not right, because sure, all the investors, all the YouTubers, they say, look, you got to make sure you do your own research and whatever, but they know that even though they're saying that, a lot of people are simply going to be buying the companies they talk about, even if they say don't do it. Well, they know that.
Especially when there's no accountability, because I think what a lot of people misunderstand about how these tiny companies that a lot of people are talking about, how that comes to be. Like, why is everyone talking about this obscure company that's not profitable, right? Why is every single channel, or not every single channel, but why are there so many channels talking about it? And it's because running a YouTube channel is a business, right? And a lot of people are running it simply by looking at what search terms are extremely popular and making content based on that. And that means that these people a lot of the time are not, and not these specific ones you mentioned, I'm just talking generally about the finance space. But a lot of the time people are just making content about stocks that are popular and not because they've found this stock through analysis. And I think a lot of people misunderstand that. And yeah, there's no accountability. You talk about a stock for, a couple of weeks, it's because it's popular, and then you never see that again, right? You never see whether they invested in it or whether they sold it or whether how that even panned out over time. So that part of YouTube, I dislike. I don't, again, I'm not talking about these people specifically, but you tend to see that from time to time. But I mean, I really like Graham Stephan's content. I think he makes good content. And I think, I think my content is kind of a little bit more guided towards people who want to analyze and dive into the numbers, whereas Graham is talking to a wider audience of people. And that means that the content is different. But I don't think the content that these people create is necessarily bad. I think that they all have their place in the space, but the only content that I would actually call out, and I'm not saying that these people make this content, but just generally, as we're talking about the YouTube finance space, there's a lot of players now. It's very saturated. There's a lot of people making it. The only thing that I would call out is that there are people that are abusing their following to run pump and dump schemes. Yeah. It's very obvious. Yeah. It's very, very obvious. So essentially they find a stock that has a very, very small market cap, that has very low trading volume, and they essentially will make a position. They either work with the company or they just themselves build a position in that company at a very, very cheap base or whatever. They battle through that low trading volume. And then what they do is they make videos talking about how that company is fantastic, how this is the next big growth stock. And they pick out a couple of points why it could potentially be a big growth stock. And then they might even say in that video, look, don't buy this stock because I'm buying it, but they still know, as I said before, they still know that even though they say that and they cover their ass, people are still going to buy that stock because they've said that they're buying. Yeah, and the title is like, I'm buying $100,000 of this stock, and then the thumbnail is a picture of like 10,000% up. It's like, you're not telling me to buy it, but you're doing everything but telling me to buy it.
Yeah, I'm buying this. I'm not saying you should, but
I'm putting $100,000 into this, and I think it's going to go up 1,000%. But don't buy it. Yeah, exactly. No. And then the idea is that, they release those videos, they make a few videos, and then people start buying the stock because it's got extremely low trading volume. Even getting 100 people to buy the stock can spike the trading volume. And when you spike the trading volume suddenly with buy orders, it'll shoot the stock price up extremely quickly. And that's the pump. And then the dump is that the YouTuber sells their shares at the high price, hopefully without disturbing the trading volume too much. And then they make a bunch of money. And then the suckers that follow them are left holding the bag. So that's the kind of content that I would be very cautious of. But having said that, to most people, and particularly you guys listening to this podcast, you're all pretty damn switched on. Obvious. We're thinking about value investing. Yeah. It's pretty obvious. It's pretty obvious when you bump into that sort of content. Yeah.
So if you see a big kind of following finance YouTuber talking about an incredibly small market cap stock in a very positive light, then just raise a question mark.
Yeah. Yeah. No, it's that's definitely.
But I mean, generally speaking. Sorry,
no, I was just going to say it's definitely the dark side of I mean, there was that whole thing about that. I can't remember what company it was specifically, but they were paying YouTubers $10,000 to do a review video on it. And of course, not everyone who spoke about that company got paid. But there was a lot of people who got paid to talk about that company. And that's, it's kind of sad because that's no longer independent analysis anymore. Even if that's what you do on your channel is to talk about companies you think will go up. That's not independent analysis anymore. You're just getting paid to do it. So
it's betraying your audience.
Yeah.
That's what it is.
Yeah.
It's just betraying your audience. But I mean, like generally speaking, just back on the topic of these bigger YouTube channels, I mean, they don't really follow the same kind of investing philosophy that we do. But you know, I don't think there's like everybody has their own opinions. So I think that generally speaking, you should just, with any sort of investing content, even our investing content, you know, you just treat everything with a grain of salt and come to your own conclusions. But you know, obviously those guys are not kind of the more value investing style that we follow. They're not like the Warren Buffett, Charlie Munger style. But, you know, they invest in a different manner. And, you know, I think that everyone should just watch the content and come to their own conclusions on what you think is best. I mean, we'll obviously tell you that value investing is the best strategy. And we think we've got a pretty good argument for that. But, you know, just everyone should just come to their own conclusion, I think.
Yeah, 100%. 100%. All right.
Well, we said we'd get through 10 and we got through 2.
Yeah, we kind of spent a bit of time on that one, but
yeah, we did. That was good though.
I think that was good. I think, you know, there's I think we set our piece on that question for now.
Yeah, I think so.
Thanks everyone for tuning in. As always, if you have more questions, even though we have quite a few that we're going to try and get through over the next few weeks, we always love hearing more questions, particularly if they're, you know, around, you know, what's happening over the past couple of weeks or something like that. Then we can kind of discuss that and weave that into it, whatever news topic we're talking about at the time. So head over to the YouTube version of the podcast at youtube.com/The Young Investors Podcast and leave your questions as a comment on the latest episode. Thanks Sharesight for sponsoring as always. Sharesight.com/young investors. If you want to get 4 months off a yearly subscription, or you just want to try it out for as long as you want for free, you can do that via that link. Thanks, Brandon, for joining me as always.
All good, friend.
And we'll see you guys next week. See.
And don't forget Movember. If you want to donate, Movember, please. Thanks,
I'll
guys.
remember to put the link in the in the description of the YouTube video. So
awesome.
go check it out.
All right. Thanks, guys.